Hello, and welcome to this month's edition of the ESSSuper Investment Update. In this update, we'll look at the impact of Brexit, Australian interest rates, and ESSSuper's monthly investment option performance. July saw global share markets reaching all-time highs, emerging market shares generating strong returns, and high-yield company debt also performing well. Australian shares returned 6.5% for the month. The Australian dollar appreciated against the major currencies, with the largest move against the British pound. This comes as little surprise given the decision by Britain to exit the European Union in late June. As you can see, this chart demonstrates investors' surprise to Brexit. Both the UK share market, the blue line, and the pound, the orange line, fell significantly. The pound was down almost 8% against the AUD on the day of the referendum, as highlighted by the green line. Significant questions remain as to what the UK's relationship with the EU will look like and whether a decision to exit the EU will benefit the UK. While the pound remains low, the share market has essentially recovered all of the initial losses as investors realise that the Bank of England will likely further stimulate the economy. While Brexit is considered to be a significant event for the UK and potentially Europe, given the potential precedent for other more vulnerable nations such as Greece, it's considered insignificant for the rest of the world, and markets have responded accordingly. On the 3rd of August, the Reserve Bank of Australia reduced the cash rate from 1.75% to 1.5%, as you can see in the chart. While the previous cut in May took the market somewhat by surprise, this cut was largely expected. On the basis of weak inflation and terms of trade, there were few barriers to a rate cut. Similarly, a strengthening of supervisory measures means the risk of further house price rises has reduced. Having cut rates since May by 0.5%, we expect the RBA to pause before cutting further. With strong performance from share markets throughout July, ESSSuper's more growth-orientated investment options generated solid positive returns, as you can see in the chart. Stronger performers included Australian and international shares, as well as the international corporate debt portfolio. ESSSuper diversifies risk across and within asset classes to mitigate the likelihood of any one market or investment dominating the returns of the portfolio of the ESSSuper investment options. This remains particularly important during a period of unprecedented market intervention by global central banks that have precipitated previously inconceivably low interest rates. The long-term performance of the ESSSuper options remains in line with our expectations, and the 5-year results are above long-term expected investment returns. The default growth option has delivered 8.9% per annum over the past 5 years. It's important to remember that superannuation investing is primarily designed with a long-term time horizon, and switching between investment options based on short-term returns can materially impact the performance of your superannuation balance over the long term. ESSSuper will continue to manage the fund's investments to deliver optimal retirement outcomes for our members, and we look forward to presenting to you all again soon. Thank you.